Let's dive in and take a look at what happened in the month of May and look at some of the major indices and what our indicators are telling us right now. Hello everybody, I'm Dean Barber, Managing Director of the Lenexa Office of Modern Wealth Management. Welcome to the monthly economic update. We're going to go through things pretty quickly today. If you recall, at the April economic update, April was a pretty rough month for the markets, and there's this saying that you should sell in May and go away. Well, following the month of April, there was some pain there, so you might have said, oh, let's sell in May and go away. If you'd have done that, you'd be really disappointed because the results in May were actually very good. We really had positive returns across the board. Dow Jones Industrial Average was our lowest performer for the month of May at 1.61. And also year to date, the Dow Jones Industrial Average is up 3.59%. If you take a look at the best performer for the month of May, 7.37%, that's our NASDAQ 100. And year to date up 13.75%, and that was followed by the S&P 100 and then the S&P 500 at 5.7 and 4.75 respectively. The equal weight was up 2% and up 5.13% on a year-to-date basis. One of the things that you'll notice that changed from the last economic update was all of these indicators over here that are now reading either bullish or very bullish. We're saying neutral in the month of April. So things have turned around. Things are now looking bullish or very bullish. And you can kind of look through here and see the number of stocks that are in bullish territory versus neutral versus bearish. And so we kind of look at all these things here and we can say, month of May actually turned out to be a really solid month. What happened with interest rates in the month of May? Was a little bit of a change, and I want to focus on a couple of things here. I want to focus on the 2-year Treasury and the 10-year Treasury. So this is going to pick up off of last Friday, the 24th, and what we're going to see is that the 2-year Treasury was at 4.93, the 10-year Treasury at 4.46. But if we back this up to May the 1st, you can see that the 2-year was at 4.96, so almost no movement on the 2-year Treasury. The 10-year Treasury, however, went from 4.63 all the way down to 4.46. So a much more drastic move on the 10-year Treasury downward in the yield versus the 2-year. And so we still have that very steep inversion from the 2-year to the 10-year Treasury. We can talk about recession. We can talk about whether or not that's on the horizon. And the reality is that we don't know. We do know that this is the longest yield curve inversion that we have ever seen. And we know that most yield curve inversions do lead to a recession at some point in time. Inflation is remaining stubborn, and it doesn't appear that we will get any kind of a relief or a rate cut from the Fed's June meeting. In fact, I would venture to say that we'll be lucky to get one rate cut here in 2024. And of course, all eyes are on the election. With that, we're keeping an eye on everything for you. Please don't hesitate to keep the lines of communication open. Talk to your advisor and make sure that your allocations are set for what your overall financial objectives are. Until next month, I'm Dean Barber with your monthly economic update.